So, of course, currency traders are anxious about the Canadian dollar because of the trade war. Our next guest says the loonie could see a swing in between 4 to 5 cents, depending on future tariff announcements. Let's go to Adam Button. He is the chief currency analyst at Forex Live. Thanks for joining us today. You have your eye on that April 2nd deadline, which is when Washington will announce what they're saying are retaliatory tariffs. What do you expect that day?
Yeah, I mean, it's gut check time in the currency market and in the market in general. We're seeing right now the good sign is that the Canadian dollar is holding up, right? So the market's telling you it's not getting worse, despite this rhetoric and this rhetoric that we're going to hear later this afternoon. But what we're really concerned about at the end of the month is this idea that VAT taxes or Canada's HST or GST is a tariff. And the Trump administration has taken this line indicating that they'll retaliate against those kind of tariffs. Now, those rates are 5% in Canada, and then various provinces might be higher. Over in Europe, it's upwards of 20% in the UK, Italy, and some other places. So if that is the line that the administration is going to take, it is really a dire consequence. And I think it's irreconcilable. I mean, it's absolutely economically illiterate. And you can't organize or you can't counteract something like that. So it will put Canada and really the rest of the world in a difficult spot, and I think signal a watershed in global growth for this year that will certainly weigh on the Canadian dollar.
Okay, so let's talk a little bit, Adam, about how currency traders are pricing in the turmoil. What do you see them doing?
Well, right now, I think everybody's watching every headline. It's day to day. Right now, it's hour to hour. We're going to see a meeting in Washington this afternoon. The tone out of Howard Lutnick, as you illustrated ahead of this, is poor. But, they're having a meeting, and that means they want to get on with something. So, right now, we're just watching. And if you look at the end of this month, a lot of U.S. officials are saying, all right, this is about fentanyl. And we hope and we believe that that's going to end this month and that these retaliatory tariffs won't be bad. Canada has about 1.1% tariff rate on the U.S. On all goods. So it's negligible if they actually want to do reciprocal tariffs. But if they really start moving the goalposts, then it becomes a very difficult thing to price. So you have the Bank of Canada right now saying, all right, we're going to wait and watch. We cut yesterday. I think they're prepared to cut maybe another 50 basis points no matter what happens. But beyond that, it's going to depend on some of these policy choices.
Yeah, they also released a survey, and I'm wondering what your take on the survey was. What did you read there?
Yeah, it was a highly unusual step. The Bank of Canada has never really done this before, where they did a survey of businesses and consumers and asked about their spending plans. And they went to businesses and they said of businesses, about 40% of them said they were thinking about lowering employment, and almost 50% said they were planning to drop CapEx. Now, those are depressionary figures. I mean, that's a dire number. Now, as time goes on, and if this resolves, that can unwind pretty quickly. But as it continues, that uncertainty is going to weigh massively. And if they follow through on it, you're into a terrible recession in Canada. And that's when you can get to, you can get down to into the low 60s or under 65 cents on the Canadian dollar, I think, in pretty short order, if that looks like it's going to stay permanent.
So I know for you, you're thinking, as many did early on, that this is about opening up the trade deal, Kuzma trying to renegotiate that maybe ahead of time. And I'm wondering if you are sticking to that and you then see what's happening now more as a negotiation towards that.
Right. It's one of two things. And it's a bluff, the entire thing, which is what we believe, and that it will be all wrapped up by the end of month or April 2nd. We tone it down, we get a new prime minister, we reset. The Canadian-U.S. border stays largely open. Maybe we have to swallow some tariffs around things like aluminum and steel, which don't make any sense. But anyway, it's only 4 years. Alternatively, you take Trump at his word that he wants to swallow up Canada and make it the 51st state. So, that's sort of the balancing act that the whole market wants to do. But you back away and think, well, Congress doesn't want to do that. Congress doesn't want to have tariffs on Canada. And Congress really does have the power on that. So, Trump does talk a big game and then he reels it back in. And hopefully we see signs of that today, which is a big day for the market. And then we can move forward with some level of certainty. That's obviously going to help everybody involved in cross-border trade and the global economy. So we retain that optimism. And I think now the market's telling you the Canadian dollar isn't going down. The Canadian stock market's hanging on. And I think that is really the message right now.
Okay, we will take that message. Adam Button, sir, thank you very much for joining us. Appreciate your time on this.